Welcome to Real Estate Investing Unscripted, a podcast from Fund That Flip, where we explore some of the most creative, innovative, and inspiring stories from the real estate investor community. With expert tips and success stories you won't hear anywhere else, you'll come away with inspiration on how to improvise in the unscripted world that is real estate investing, so that you can dominate your next real estate deal. Now your host, founder and CEO of Fund That Flip, Matt Rodak.
Welcome, everyone, to this episode of Real Estate Investing Unscripted. I'm your host, Matt Rodak, founder and CEO of Fund That Flip. And I am once again super excited about our guest today. His name is Mr. Matt Faircloth. He is the owner of the DeRosa Group. Matt is also the author of Raising Private Capital, Building Your Real Estate Empire Using Other People's Money, published by BiggerPockets. And I'm sure we'll be talking about the book in a bit. But with that, welcome to the show, Matt.
Thank you, Matt. Awesome. Thank you to be here. I'm really glad to be a guest on the show today.
Always love having another Matt on the show.
Isn't it easy? Like, hey, Matt. Hey, great.
Do you know, I gotta get this in there. Do you know what the name Matthew means?
A gift from God.
Gift from God. Yes.
That's right. That's what you and I are. Just so you know, everybody. Me and Mr. Rodak are gifts from God to all you people. So be grateful for us.
Everyone knows. Love having you here. We had your wife on a few episodes back. And if you're listening, if you haven't checked that out, rewind a few episodes, check that episode out. Another great episode. But would love to kind of get your perspective a little bit about, you know, how you guys get started, and maybe just a reminder for everyone of who the DeRosa Group is and what y'all are up to down in the Philly Trenton area.
Yeah, man. So the DeRosa Group's been through a lot of iterations. We were a decent sized property management company. We've been a construction company for a while. And we've gotten involved in different facets of real estate. But at the core, we've always done, just provided great housing for people and just opportunities in real estate. The mantra for my company is transforming lives through real estate. Because I believe that real estate touches a lot of lives, whether that's people that invest in real estate, whether that's people that own it, whether that's people that work on it in construction, whether that's people that live in it. Our goal as a company, our mantra is to make people's lives a little bit better through our work in real estate, through what we do. And that entails providing alternative investments for those that want to diversify their portfolio and invest in real estate through passive investments that we offer, for those that want to live in really unique spaces that we provide, and for those that want to work for an organization, maybe not as an employee, but as an affiliate, that for an organization that has plenty of integrity, and that tries to take the high road no matter what. So
that's awesome. How'd you guys come up with that? Was that something that was kind of a founding principle for the business? Is that something you guys evolved into, I guess, specifically the transforming lives through real estate?
We when we first got started, we did a lot of work in Trenton, New Jersey, and Trenton is a emerging urban environment with it is an old steel town that's rebirthing itself, as many steel towns in our country have done. So our original mantra was revitalizing urban America, and it was kind of cool sounding,
I like that.
Yeah, it is. Except for it sounded like we were a not-for-profit. People were like, "Hey, what do you guys do?" And it wasn't clear what we as a company were up to. And so we decided to change it up and really got in tune with what it is we do, like just what our core values were. And we had our core values written out, and it was what I just said is like, alternative investments and, quality housing and great, awesome place to work with lots of integrity, and everything like that. And it just all really boiled down to, we're in real estate and we want to change people's lives. And so transforming lives through real estate just kind of came out of our mouths one day,
That's awesome.
When we were just sitting around brainstorming, rebranding the company a bit. So that's how that came up. It was about 8 years ago that we came up with it.
And it's stuck and it's working. I think it is cool how, like, don't quote me on the statistic, but I think real estate, like in some form or fashion, makes up like 13 or 17% of the U.S. GDP, right? When you factor
I heard it was 25, but
25. Okay, yeah, but it's a lot.
Well, if you factor in all the sales of construction materials, if you factor in all the finance work that's around real estate, and that's around commercial and residential, real estate just is something you cannot get away from. It touches a lot of the economy on a lot of different levels and everything like that. And there's so many different ways you can get involved in it. So that's why I think it's such a powerful space to play in. And if you have integrity in it and you want to do the right thing by people, it's a great place you can make a difference too.
Totally. Yeah. So one of the things I was hoping to kind of really pick your brain on was a topic that I think, one, you're familiar with because you wrote a book on it, but it's something that is, especially for people that are getting started or maybe, scaling their business, and that's raising money, right? I think it can be both difficult to do. And I think for a lot of people, it's intimidating, right? It's hard to go ask someone for money. I'd love to learn more about your story in terms of how you guys raise capital for your first deal, what you learn, how's your process evolved, from your first deal to where you guys are at now.
Oh, geez. First deal. True first deal was a house I lived in. It was a what they call in BiggerPockets, a house hack, which if Liz went here when she was on the show, stop me. But I bought a 3-bedroom, 1-bath, lived in 1 bedroom and rented out the other 2 bedrooms to a couple of friends of mine. I ended up making $60 a month in profit and lived there for free. In that. So it was a phenomenal arrangement, and I was able to, really scale up my personal finances at that time. And for like a 25, 26-year-old, being able to live in a property for free with a couple of his buddies living with him was a phenomenal deal. And that's really turned my head to real estate from there, towards the power of real estate. So we never looked back since then. And so that was our first deal. Our current deal, we're currently putting together capital for a 166 unit apartment complex in Kentucky. And so we've scaled and grown that we've gotten ourselves into all kinds of cool assets, including office complexes and mixed use buildings and, lots of fix and flips and stuff like that, which would just by slow growth, one foot in front of the other, type of growth. So
what's your mentality, right? Because I think this is a big part of raising money is having the right mentality of raising money, right? Like I said, I think a lot of people find it difficult to even wrap their heads around, like going to ask people for money. Like maybe just talk us through about like your mentality and how your mentality has shifted over time.
Yeah. Oh, geez. Okay. So when I first got into raising money, it was like going down on bended knee being like, geez, could you please do me a favor? And would you believe in me? And, do me just hoping that they decide to get in and everything like that. And that they, go out on a limb for me and stuff like that. But at the end of the day, I've found out that over time, that it's not even like a cocky type of thing, but there is a certain level of understanding that people that invest in, what you and I do, they need us because they need alternative types of investments to get themselves into. So my shift in consciousness has been that it is a symbiotic relationship. I need them just as much as they need me, with regards to my passive investors. And I need them because I couldn't make my deals happen without them, but they also need alternative investments because aside from us, the only other thing they have is Wall Street. And there's no telling what Wall Street's going to do tomorrow. So
it's up 400 points again today after being down. I don't know how many points.
Yeah, but what's it going to do tomorrow?
Crazy. Who knows, right? Yeah.
Yeah. But I'll tell you what will happen tomorrow is the loans that you offer will most likely pay their interest. And if they don't, they have collateral, and the investments that I offer for people that are in apartment complexes or private loans as well, will produce because they're involved in sticks and bricks that aren't going to just dissolve and go away. And if you own Microsoft stock and Microsoft goes down to zero, I can promise you're not going to go take the CEO's house,
right?
But if an investment that you or I get somebody involved in goes down, they at least have sticks and bricks standing behind their money. So
something tangible there, right?
Yeah. There's nothing tangible in Wall Street investments, and not to like badmouth, not to like dog it, because I've owned plenty of stocks and made money on stocks, but I don't think that they should be the end all be all only way that people make money for their retirement. I mean, they should have stocks, but also have other things too.
Yep. Yeah. And I want to pick up one of those things you mentioned there of like the mentality shift of like, the person with the money kind of has all of the power, or like they're doing you a favor. And I think that's super important, right? Like there's a certain number of people out there, like it's their job to invest money and they need good deals to invest them in, right? Like that's kind of where I sit now. Like it's my job to like make loans. I need people like yourself and other operators to find good projects and be good operators. So I think that's an important thing, especially for people that are trying to get their first deal financed. That mentality of like what you have is a limited quantity, right? You have this property that you're buying, right? You've got a perspective on how to fix it up and sell it. There's a lot of money, right? All money is green. Like there's only one opportunity like that in Kentucky for your 166 complex, right? Like that's the value, I think, in the relationship, is being able to source the projects and do them right.
Yeah. And I mean, although there's a lot of people out there on, CrowdStreet and on a lot of the online funding sites and stuff like that, it's hard to reach out and actually talk to the operator, the syndicator, the sponsor or whatever you want to call them for the deal, or to reach out and talk to you, the owner of the company out putting the loans to work on the street that are vetting those deals. And I think that there's being able to really do your due diligence on what you're getting yourself into. It's good to have the data there, the human touch, that for folks to reach out to you and talk to you directly about what it is they're getting themselves involved with.
Yep. So one last question here on raising private capital. How have you kind of built up your Rolodex and your network of investors, and kind of how has that evolved over time? And what are any kind of tips or tricks you can give those listening in terms of, building that Rolodex, keeping people warm, so that you do have the capital firepower there for when you come across good deals? Well,
for me, this is not the true answer to your question. The answer to your question is, how can folks that are listening expand their Rolodex and build their audience and stuff like that? But so the way that I did it is by I did a YouTube channel. And I did regular posts on the YouTube channel. But the real answer to your question is by doing things consistently, and so picking a thing that is something that folks can track and can see what you're up to, and by flying a flag somehow, and then doing it regularly. Before we got on, you and I talked about Joe Fairless, or other folks that are out there that are big names in the business, and what their secret sauce is just repeatability. They've done it over, and they pick a play and they just run that play over and over and over and over and over again, to use a football term, And a lot of times in football, when you see a team do that, if a play works, keep doing it. And so I think that the answer is, for those that are listening, to find a thing that you're good at doing that helps get your name out there with regards to what you're up to in business. Be that writing articles, be that Facebooking, be that a podcast, be that running a meetup, whatever it is, that thing that allows people to notice you. In a modest way, not bragging or any of that, but just finding a way to get yourself into the public eye on a regular basis, and with a little bit of humility and a little bit of just the sincereness to just educate people and help them out. The money tends to just follow. I mean, we do a lot of education on a YouTube page, and it's not intended to raise investors, but it does. And that's because we just go out and educate people with integrity on our YouTube channel, and talk about what we're learning in the business, and just talk in the field about what's going on in our company and deals that we're in the middle of. And people tend to just see the authenticity there, and they see what we're up to, and they see we're for real. We're not just some talking head that's online talking about real estate, not actually doing it. They just see that and look, okay, these guys seem like they have their act together. Let me check them out. So that's the very long answer to your question, but I think it's just really repeatability is the answer.
It's so true. And there's a saying in the venture world, and I guess it probably applies to anyone that's raising money, is that investors don't invest in dots, they invest in lines. So it's like, if you think about, like, if you come to people and say, like, I need money, that's like a dot. But if there's 10 dots before that of like your YouTube channel or your regular, monthly email update or a podcast or whatever it is, right? They've got a bunch of different dots that they can now connect, that forms a line, as opposed to just like, here I am, like, give me some money, right? So like totally the consistency thing, I think, is right on.
No, I agree. And I think that's because the alternative to being consistent about something is trying a bunch of different things and being willy-nilly and trying this, trying that, trying this and trying that. And believe me, I've done that. I can't say that everything that I've ever done in my business has always worked. I've tried going in a lot of different directions at once, and I can tell you firsthand that does not work. So
yeah, it doesn't hurt to experiment, but at some point you got to commit to something, right? And give it a full go.
Mm-hmm.
Cool. So appreciate you sharing that. So the theme of the show is real estate investing unscripted, right? With the idea being, no matter how much you plan, no matter how much experience you have, no matter how much you've penciled out all of the details of a potential project, stuff just happens, stuff goes wrong. There's anything can happen, I guess, in this space, right? And if you're going to succeed, you got to be able to improvise a bit. So would love to hear a story, and I'm sure you've got plenty of them, but would love to hear a story from your perspective of where that happened to you. Kind of what did you guys learn? How did you get through it? And how is it impacting your business and your thinking going forward?
Yeah. I
love when people start to laugh because I just know a good one's coming.
Well, before we got on, you talked about an area of our business. I mean, I could go here if you want, but an area of our business where we expected things to go a certain way, and then we kind of got our knees taken out, and then and we kind of rebuilt from there. Is that the way you want to go?
Let's hear it. Yep.
So, okay, we were, and this is perfect because this involves, in some ways, Matt Rodak putting on his cape and, swooping in and saving us a bit, right? But or at least through an introduction. So what happened was we were raising capital for an apartment complex in North Carolina. And we were raising $3.2 million. And we had another apartment complex in Philadelphia that we had sold. We were selling. It was under contract to sell. And our goal was to sell that apartment complex. It's somewhat complicated, but it'll make sense when I explain it. We were going to sell that apartment complex in Philly, do a 1031 exchange to take some of the proceeds from that and invest it in North Carolina through something called a tenant in common. Because in a 1031 exchange, you have to the prior entity that's selling its asset has to own the actual dirt. You can't just sell a property and then invest as a limited partner in a larger company, right?
Yep.
So we had to actually carve out a chunk of the new property, through a tenant in common. It means the two companies would own the new asset side by side with each other, right?
Yep.
Sounds complicated, but trust me, it was going to work. So the sale of the property in Philadelphia was going to kick in $700,000. We were going to raise another $2.5 million out of our network. And it was going to be a big stretch for us, but I was pretty sure I could do it. And I was able to raise the 2.5 pretty quickly. And then, that purchase was closing January 15th. Okay. We closed on the apartment complex in Philly about a month or two before that, mid-November. $700,000 went to the 1031 exchange custodian that I had vetted online. I had spoke to the folks that worked there. They seemed like a great company. They had some good reviews on BiggerPockets and everything like that. So, was very happy with them. And so I gave them wired them the $700,000 and then went back to raising capital for my apartment complex. I fast forward to, late December, a couple of weeks before closing. I called the 1031 company. I can't get a hold of anybody. And I start to do a little bit of worrying, and I start to Google and stuff like that. And it turns out, long story short, that company was a front, and the owner was running a Ponzi scheme. And so he was taking people's 1031 exchange money, buying himself real estate assets and burning through a lot of it and just blowing it. And then just robbing Peter to pay Paul. So a new party would give him money, and then he would pay back the old party that was looking for their capital. And so he just was kind of running a Ponzi scheme. And it just so happened that the carousel came to a halt as I had given him my capital. And so my $700,000 was gone, and I was, kind of left holding the bag and had to find a way to come up with the rest of the capital to go into this new apartment complex with about 2 weeks left. This would have been, of course, none of it would have been okay, but this would have been less of an issue had this all been my money. But I had raised investors that invested in that apartment complex in Philadelphia. So that $700,000, a lot of that money was not mine. A lot of that money was my investors' money through the limited partnership that we had raised to create that, to buy into that apartment complex in Philadelphia. You with me so far?
With you so far. So sold the property, gave it to a custodian, which, by the way, their main job is to safeguard the money, right? Which is why they're called a custodian.
Yeah, they didn't do that.
And they didn't do that.
No.
So you're out $700,000, which
they're on their face there. Yeah.
I'm doing the math right. So now you're $700,000 short on a $2.5 million purchase, or
and I'm 2 weeks out from closing.
You're 2 weeks out. Okay, so what happens?
So what happens was, a lot of tears and a lot of prayer and a lot of like, geez, what do we do? But it hit me pretty quickly what I needed to do. The new company, my share of the new asset was 30%, along with my team. Okay, the $700,000 was going to buy 18% of the new asset. So what I decided to do is like, okay, I'm going to give those investors of the $700,000, I'm going to give them 18% of my side. So I pretty much gave away the majority. Like I ended up with literally a few percent ownership of the new asset because I just covered them. I had to give them something, and so I gave them my equity. I could have easily just called them up and said, "Hey guys, listen, we got robbed. We're going to find this guy. We're going to run him down. We're going to get it back. Don't you worry. And sit tight and I'll get back to you." Okay. But I decided, I talked to a few of my friends, and this was not something I wanted to do. As I said before, we try and do things with integrity. So I put my investors first. It just seemed like the right thing to do from the get-go. And I told a few of my friends what I was going to do, and they're like, "You're crazy. You should just, you can't go give your work away to them." But I was like, you know what? I have to, because these folks invested their hard-earned capital with me, and it's what I needed to do to get just to make sure they were made whole. Because they put their faith in me. I need to cover them, because I had to do it.
Well, so, I think the other thing there, right? Not to get you off, but like that's the long-term thinking, right? Like the short-term thinking is like, let me keep my 30%, and these guys kind of get screwed and it sucks, and they probably never.
Well, we formed a class action. So listen, we're going after this guy. I formed a class action suit with a bunch of other investors, and he has a bunch of assets. We will get our money back from this guy, but it'll take probably 18 to 24 months to get our money back.
Yeah.
So it's a long, arduous process and a long road to get there. But we will get to the finish line and get our money back from this guy. But I don't want those investors to have no collateral while we're working on getting that money back. So I gave them my side of the apartment complex in North Carolina. So that's the first move, as I got my people covered. Some people when I'm talking shorthand, when I talk about my investors, I call them my people. So so those are my people, and so I got my people covered. When the other side of it is, okay, now I've got to go raise another $700,000 to get to closing. And so I dove back into my network, shook it as hard as I could, was able to come up with another couple $100,000 in investors. And then I needed a bridge loan. And so I called you. And you have referred me to someone who was a great bridge capital provider in that. And it's just great to know good people that are willing to do whatever they can to take care of you, you being one of them, and everything like that. And I really have not forgotten that referral that you gave us, and who covered us. I mean, again, he got paid very well for taking the risk that he did on such short notice. Don't get me wrong, and everything. So he wasn't just doing us a favor. He also did very well in that transaction as well, as he should. Yep. And we were able to close. And so I didn't even have to move closing after getting $700,000 taken out from under us. And that. So I talk more about this story in my book, Raising Private Capital, because it wasn't easy to do, but I talked about it because I just needed to caution investors or caution folks that are putting deals together that you cannot put yourself first. For most times, you will not be the first priority in these conversations. Your investors will be the first priority. But if you take care of them, then you get to do more deals, and they'll take care of you.
It's exactly right. I think that story also proves that out, right? Because I get the call from you, right? And I'm happy to make an introduction to someone in my network. It's not a type of loan that we make here at Fund That Flip, but I'm not comfortable making that introduction to someone in my network if it's not a guy that I trust and knows going to do the right thing by the guy I'm going to make the introduction to, right? So like, it's totally a virtuous cycle of if you're doing the right things and people see and know that you're doing the right things, that you get more opportunities and you get more looks. If it's just someone else that I didn't know that well, like that introduction probably doesn't get made, right? I mean, so.
Yeah. No, well, again, I love. I haven't thought about that way, and I talk about playing the long game. Yep. In business, it's just good to play the long game. So you rarely burn a bridge. You kiss and make up if you get sideways with somebody, and everything like that, because it's just that the long game is about realizing that that everything in life, most things in life are marathons. Yep. Very few things in life are short lived. Yeah, and so and things do come back around. So
I like to say I now think in 10-year increments with like business relationships.
Yeah,
this wasn't the case when I was younger, right? I was like, what can this person do for me today? And if that was nothing, like it was kind of like move on. Yeah, I mean, you and I have known each other for what, 3.5, 4 years now. I don't think we've actually done a deal together yet.
No, we've not. I didn't know if
I'm not worried about it, but I'm not worried about it. I know we will.
We will. Yeah. But you and I also refer each other to good people. Yep. And I find that, and this goes to, a lot of folks that are out there that like just good people know good people. Yep. And so whether you do business with them or not, I mean, just good people tend to watch other people that are out there. You watch other people's actions from afar, and I watch people that are playing the short game, and I see them, and I see people that are playing the long game. And those that are playing the long game are those that I choose to align with, over and over and over again.
Totally. Could not agree with you more. Yeah. Well, that's a crazy story. I hope it works out for you. I guess
it will. It will, because you can't, if you do people like that, you cannot hide out forever. And he does have assets. They will get them from him. And if they don't get everything back, it's okay, because my investors are still covered and I get to shake it off, which I did after some time. It was a heavy wound to lick, but I did. And my investors are covered. And so I get to live another day and raise for another deal without having that scar on me that I lost investors' capital. No, they were covered. The investors were fine. I'm the one that got punched in the gut. They didn't.
Live to see another day. That's it, right? Because you can always figure out a way to make that money back over time, as long as you're still alive.
Yep.
Well, appreciate you sharing that. One of the things I'd love to pick your brain a little bit about. So you wrote this book on raising private capital. Where can people get the book? Is it on BiggerPockets, I'm assuming? Is it on Amazon?
It is. Well, so yes and yes. The best place to get it is on BiggerPockets.com, because we put together a really great bonus package for those that buy it on BiggerPockets, including like an 1.5-hour interview with my SEC attorney, a really cool workbook. I wrote another book on buying apartment buildings that they get a copy of as well. But you can buy it, you might cheaper on Amazon, but there's more value on BiggerPockets. But either way, or they can just go to my website, DeRosaGroup.com, and there is a link to buy the book there as well, which I believe goes to the BiggerPockets version of it with the bonuses.
Cool. So check out the book, guys. Talk us through a little bit about what it was like to write a book. I'm super curious. Like, how'd you come up with the idea?
Oh man, if you ever decide to do it, give me a call first. But
it was a process. Like,
I'd never dealt with writer's block before, Matt. I've always dealt just being able to just move, like do what I want to do when I want to do it. It's whether that's, I'm going to get up and have breakfast, so I will do that. I'm going to call that potential contact. I'm going to do that. I'm going to, write an email, but to sit down and say, okay, I'm going to write a book, or I'm even going to write a chapter or a page of my book or whatever it is. The experience of wanting to do something, but then not having the inspiration yet, I had to get used to that feeling. And there's a book by Stephen Pressfield called, there's two of them, one called Going Pro, which is a phenomenal book. And the other one's called The War of Art, which is a phenomenal book as well. And Stephen talks about something called resistance, which is the resistance to creativity. And what he talks about in the book is what I experienced in writing, was that you've got to be willing to wait it out. That those that succeed in creating things like a book or like a piece of art or whatever are those that are willing to stay in and engage and understand that the writer's block, the resistance, the desire to not create eventually goes away. And if you allow yourself, because there's many times where I tried to write, I would sit on my desk for like a half an hour. I was like, screw this, nothing's coming out, I'm not writing. And what I found is if I sat on my desk for around 45 minutes and just kept trying to do it and kept writing things, this is crap, let me delete this, or whatever it is. After around 45 minutes, the true divine inspiration would hit me. And then you get in the zone, and there's the being in the zone of writing is a beautiful thing, because you just kind of lose track of time and you get into it and you start like, I'm going to talk about this. I'm going to talk about this. This is great. Yeah. And then before you know it, you've written 10 pages and you realize a half an hour is gone and you've written 10 pages, and it's like it's really cool content. So, it's way more time consuming than you think it is. It's a fun process. It's not something I enjoyed the entire time. I'll probably do it again. Now that I know how to do it, now that I know that I have to wait it out sometimes, that it'll be there. But yeah, all in all, it's phenomenal, but nowhere near as easy as I thought it was going to be.
I just look at this and all the words, and like I stress out about writing like emails. So like this I can't imagine going through this process, but I'm sure it's incredibly rewarding once you. It's something like
80,000 words, that book, Matt, and I know because BiggerPockets had a threshold they needed us to get to word wise, and I'm like, can't we just make the font bigger? Like
the college essays, like right, like
it's got to be 3 pages, right? Okay, well, 24-inch font will do it.
Get it there. No, it's a great book. Check it out. Matt was kind enough to send it to me. I think pre-publication, so I got an early look and read at it. And as someone who's raised personally and for the company hundreds of millions of dollars, like there's some great nuggets in here. So whether you're just getting started, trying to figure out how to get your first deal funded and off the ground, or whether you're a grizzled, experienced vet, highly recommend checking out the book. So very cool stuff, Matt. Really appreciate you joining us. If anybody listening wants to get a hold of you to kind of learn more about either investing with you or pick your brain, what's the best place they can find you?
Sure. DeRosaGroup.com, DeRosaGroup.com is where they can hear more about what we're up to. They can pick up the book, and they can deep dive, check out everything that we're doing as a company.
Awesome. DeRosaGroup.com. Check it out, guys. I'm going to try to summarize some of the salient points that I pulled out of the show. I think kind of the first thing, if you're raising money, the mindset's important, right? Realize what you have is at least of equal value to the money side of the equation. The other big one is consistency. Investors invest in lines, not dots. So whether it's a YouTube show or email or making phone calls on a weekly, monthly basis, build some consistency around your pipeline for capital. And I liked another word I wrote down here that you mentioned, which is authenticity. I think raising capital, and I do some teaching here in New York for startups, and I like to say raising capital is an incredibly personal thing. And if you're not authentic about it, like investors can feel that. And they don't write checks, right? It's like, you got to be real, and what works for some people may not work for you. You got to find, I think, your groove and be authentic with it, and find the types of investors that are aligned.
Yeah. Dogs and bees are not the only ones that can smell fear, you know? So it just showed, and not just fear, but slime too. It shows up it shows up a lot. It's a lot more transparent than you think it is. So
just got to be real. Be real with yourself. And I think you guys nailed that, right? With your value prop and your values that you've been living for 8 years. So I think that's probably,
thank you.
If I had to guess, it's probably core to even how you guys go out and raise money. And that kind of goes into the last point. You got to think about putting investors think long term, have integrity. Short term losses, in my experience, oftentimes turn into long term wins if you play them right. So
I find that if you look at life in the most macroscopic perspective that you can start to see the perfection of life, and that even the downturns and stuff like that, and the parts where you got socked in the gut, if you extrapolate it out enough and look at how that part where you got socked in the gut allowed you to look at life differently and caused you to lick your wounds and then recreate yourself and then do this and do this and do this, that it actually, things tend to work out if you give them enough time, and they tend to work out for the best if you give them enough time.
It's how you grow, right? Through the challenges.
Yeah. So,
Matt, this was awesome. Really appreciate your time. Thanks so much for joining us on this episode of Real Estate Investing Unscripted. For those of you that are listening, be sure to check out the DeRosaGroup.com, get Matt's book. Also check out fundthatflip.com. We've got a lot of good stuff, including this podcast and others. Otherwise, look forward to having you all back listening to the next show. Your host, Matt Rodak, signing off.